Bitcoin has been on an uptrend for much of its existence, with its price climbing from essentially zero to as high as almost $50,000 in slightly over a decade. One of the stories that illustrates Bitcoin's growth best is that of two pizzas, which were bought for 10,000 Bitcoins on May 22, 2010 by a Florida developer by the name of Laszlo Hanyecz. These 10,000 Bitcoins at the current cost of one Bitcoin would be worth over $400 million today. Can you imagine that? Being one of the largest currencies in the world, and in its short lifespan, Bitcoin has become one of the most profitable assets of all time. However, due to the ever-changing nature of the stock market, Bitcoin and all cryptocurrencies have turned out to be very unprecedented and very volatile forms of investment, to a point Forbes crypto news author Clem Chambers describes cryptos as now a trade, not an investment. With this volatile nature, investors and experts from all across the globe have had different views on the future of Bitcoin and the world of cryptocurrencies in general. Now, before we get further, make sure you subscribe to my YouTube channel so you're up to date with the most important updates about cryptocurrencies. Having said that, let's get right into the video. Despite the remarkable growth recorded by the giant crypto Bitcoin, many of its detractors have long argued that it's only a matter of time before it collapses back to zero and that the crash could be looming in 2021. But why would people predict Bitcoin crash despite its excellent performance lately? For most skeptics, early 2021 looked an awful lot like late 2017. At that time, Bitcoin similarly was soaring. Bitcoin cleared $1,000 on New Year's Day 2017. By December that year, it was over $18,000. $20,000 and beyond seemed very possible and guaranteed. Cryptos of all kinds were rallying. Initial coin offerings were all the rage. But as good as 2017 was, 2018 was nearly as bad. In US dollars, Bitcoin had been halved by February. By the end of 2018, it was back below $4,000. Moreover, this was not the first time the giant crypto experienced a drawdown. In 2012, the digital coin dropped 49% twice, with one of the declines a 3-day 57% punishment. Another 3-day period the following year saw an incredible 83% plunge. On November 19, 2013, the cryptocurrency lost half its value. Later that month, it began a stretch of over a year in which it went from $1,163 to a disappointing $152.40 value. As if that's not enough, in 2017, a banner year, Bitcoin fell 30% or more 5 different times. And then there was the roughly 80% plunge that began toward the end of that year. In other words, some argue that they've seen this before. Bitcoin can move north in a hurry, but it also can move and has moved south at roughly the same pace. Moreover, there is more to this than mere skepticism. Some other catalysts that could trigger a Bitcoin crash in 2021 have been named. The first one is simply the parabolic gains not just in Bitcoin, but across almost all asset classes. We've seen a number of stocks go crazy. That doesn't just include miners like Riot Blockchain and Marathon Patent. It stretches far and beyond to the so-called Reddit stocks like GameStop and AMC Entertainment. Commodities have taken off. Even in cryptos, Dogecoin, which started as a joke, now has a market capitalization of about $9 billion. So, when you talk about crashes, there are going to be crashes everywhere, whether in cryptos, stocks, or commodities. Moreover, there is cross-ownership between Bitcoin and other hot assets. Owners who experience losses elsewhere are likely to de-risk by converting their Bitcoins to US dollars. Another catalyst that is likely to trigger a Bitcoin crash in 2021 is the regulatory environment. The stampede into cryptocurrencies has caught the attention of regulators and policymakers. Following this, Treasury Secretary Janet Yellen has repeatedly and publicly raised concerns about cryptocurrencies including Bitcoin. The Treasury Secretary once called the misuse of digital currencies such as Bitcoin a growing problem, while signaling that policymakers are increasing their scrutiny of digital assets. While speaking to the Treasury's Financial Sector Innovation Policy Roundtable in February 2021, Yellen hinted that she knows the promise of these new technologies and also insisted that she can see the reality, citing cryptocurrencies have been used to launder the profits of online drug traffickers and they've been a tool to finance terrorism. A few days later, the price of Bitcoin plunged on February 22, 2021, wiping $10,000 from its value in the space of just a few hours, as Yellen once again called the digital coin highly speculative and inefficient for transaction. While speaking at a New York Times conference, Yellen emphasized that Bitcoin is an extremely inefficient way of conducting transactions, and the amount of energy that's consumed in processing those transactions is staggering. That's not the first time the value of Bitcoin dropped due to comments from a popular person. The digital coin also suffered a drop of more than $8,000 on February 22, 2021, after Elon Musk raised his concern that the price was, perhaps, rising too quickly. Musk's tweet the previous week had sent the cryptocurrency on a skyrocketing high of more than $58,000 per coin. However, it was his tweet in the weekend ending on February 21st that resulted in the fall of the cryptocurrency in a matter of a few hours. With more than 47 million followers on Twitter, Elon Musk's tweets get an overwhelming amount of attention, and it's only fair to say his tweets move markets. Elsewhere, some experts are predicting that Bitcoin will eventually crash to zero because it has no intrinsic value. According to Investopedia, intrinsic value is a measure of what an asset is worth. This measure is arrived at by means of an objective calculation or complex financial model, rather than using the currently trading market price of that asset. Although Bitcoin doesn't have any intrinsic value, Bitcoin is backed by consumer confidence and mathematics. This is somewhat similar to fiat currencies like the US dollar and sterling pound, which were once backed by gold, which has intrinsic value, but are now backed by the government, though some would argue that the US dollar, at least, is actually backed by debt. The thought of Bitcoin crashing to zero is scary to many. Is there a possibility of Bitcoin crashing to zero? In 2018, two Yale University economists, Yukon Liu and L.A. Chavinsky, published a report titled Risks and Returns of Cryptocurrency, in which the authors examined the risk of Bitcoin collapsing to zero in the span of a day. By using Bitcoin's historic returns to calculate its risk-neutral disaster probability, the two economists found out that the likelihood of an unspecified disaster crashing Bitcoin to zero ranged from between 0% to 1.3%. Realistically, Bitcoin cannot crash to zero. One of the only plausible scenarios that could cause this is Bitcoin being banned by all world governments, potentially rendering it illegal to own or use, something which is close to impossible. Moving away from the scary side of Bitcoin investments, most indicators point towards the good side of the Bitcoin cryptocurrency. In fact, the currency is expected to continue soaring higher in 2021, as more companies, including Tesla, Square, and Voyager Digital, have invested heavily in Bitcoin. Here are some of the most exciting predictions from Bitcoin's most legendary evangelists. Citibank's global head of market insights product, Citi FX Technicals, Thomas Fitzpatrick, made headlines for his Bitcoin prediction of $318,000 by 2022, a prediction he made late 2020. Antonio Pompliano, a well-known Bitcoin personality, founder and partner at Morgan Creek Digital, previously predicted that Bitcoin will hit $100,000 by the end of December 2021, a figure he revised later and pushed it to $250,000. Pompliano updated his original prediction, as he believes the available supply of Bitcoin is much less than is perceived by most, which lies in stark contrast to the amount of demand that is beginning to precipitate, in particular by institutions. Moreover, on February 17, 2021, Anthony Scaramucci, a new-found investor in crypto and founder of Skybridge Capital, which has about $500 million in Bitcoins, predicted that Bitcoin would hit $100,000 by year-end, but suggested that investors be cautious about buying digital assets. Conclusively, despite the many risks that could bring the value of Bitcoin down, investors don't need to rush to cash in their Bitcoins. The predicted crash may still be a long way off, and more upside may follow. An analyst could have correctly predicted in early 2017 that Bitcoin was going to crash within a year. An investor who listened to that advice still would have missed out on gains of at least 200% plus that came later on. In other terms, always remember that a crash is always followed by a resurgence. This means that despite everything, Bitcoin still is worth owning right now. Thank you for watching until the end of this video. If you found this video useful, make sure you subscribe to my YouTube channel and comment down below what your predictions are about the coming of a huge Bitcoin crash in 2021. Take care, and I will see you in tomorrow's video.